So Imogen, it's what, the 27th of September, and as I look at the note that Steve referred to, that was produced on the 23rd of September, and in that note you talked about we revise up our 10-year gilt yield target to 4.5%. Well, we've not been that far away from it through the last few days. Does it need to go higher?
In short, yes, I think the direction of travel is towards higher yields. We've been very bearish gilts for a long time. We upgraded our target to 3% when gilts were back at 2%, and that was considered kind of very out of consensus bearish. We then upgraded that to 4% to quite a few funny looks from clients in the market. And then, as you correctly said, we revised that up to 4.5 on Friday. I still think the market is underestimating the impact or the shifting dynamic of all the supply that's about to come on board and which sectors are going to be able to absorb that additional supply. It's not obvious that with the Bank of England, even if the Bank of England don't actively sell back to the market, just the fact that they won't be buying bonds is a huge turning point in the face of all of this supply. Going back to what I said earlier, this is pandemic style easing, but without the offsetting pandemic style monetary policy where the Bank of England were buying essentially all of the bonds that the Treasury were issuing. So yes, I think the direction of travel is still towards higher yields. Markets are very volatile and they're moving very quickly at the moment. So it may well be a short time before revising that target, but I think the next leg is higher rather than lower.
Imogen, it was in Davos about 5 years ago that Axel Weber, then of UBS, was speaking to Jeff and I, saying he was worried that the medicine would kill the patient. Is the medicine that is needed to keep inflation on track, given what we've seen from the government fiscally, is that going to kill the patient? And I noticed that I'm actually trying to find some interest rates, mortgage rates on your own site, on the NatWest site, which I know is on the consumer side of the business, not yours. But I can't find them at the moment. I'm finding it very difficult to find any live rates from any mortgage provider. Is the medicine that is needed on inflation going to kill the patient?
Yeah, well, as you say, that is certainly a different part of the business when it comes to NatWest than I'm involved in. But a lot of the headlines last night were that, some banks were cutting or taking off offering new mortgage products from their website. I think that's more related to the fact that there's a huge amount of uncertainty right now. Markets are very volatile. Pricing for bank rate was shifting around significantly yesterday. There was a lot of speculation early on yesterday morning that could well be intermeeting hikes, which I think the Bank of England put that to bed a little bit yesterday with their press release that they would reassess at the next meeting. So a lot of that rise has been priced out, but this is just related to very short-term market volatility, I think. There's no doubt that interest rates are going higher from here. We think that they get to around 4%, but that's considerably lower than the market is pricing currently. So I would push back a little bit against how tight the market thinks that monetary policy is going to get over the next couple of months in the UK. But there's no doubt that further medicine on the monetary policy side will be required. I just don't think that many hikes are going to be required to bring inflation back down over the medium-term horizon in the UK.